something massive just happened. One that could change the global economy forever. In a move that's sending shockwaves through Wall Street, Washington, and Beijing, Donald Trump has delivered a blunt ultimatum to the world's financial giants. Cancel all trade with China or lose access to the US dollar and our markets. It's a financial nuclear option. The US dollar underpins more than 80% of global trade. For global banks, losing dollar access isn't just painful, it's fatal. Trump's demand is forcing institutions from Europe to Asia into a crisis of choice. Papa Smurf commit side with China and face U.S. sanctions. Obey Washington and risk losing trillions in Chinese business. This isn't just a policy. It's a global economic war. To understand why Trump's ultimatum is so powerful, we need to look at the role of the U.S. dollar and why global banks can't survive without it. Bombshell. The dollar isn't just America's currency. It's the backbone of the global financial system. Over 80% of global trade is settled in dollars. Nearly 60% of global reserves are held in dollars. From oil sales in the Middle East to tech deals in Asia, the dollar is the default language of money. But it's not just about currency. Access to the U.S. financial system means access to the world's most profitable capital markets. Banks like HSBC, Deutsche Bank, BNP Paribas all rely on American liquidity, investors, and infrastructure. Being cut off from the dollar means being locked out of international business. It's like trying to run a global airline without access to jet fuel. That's why Trump's threat isn't just symbolic. If the U.S. Treasury enforces this demand, major global banks would face immediate crises, stock crashes, capital flight, legal chaos. For them, the dollar isn't a choice. It's a lifeline. And now, Trump is holding that lifeline hostage. On July 27th, Donald Trump stunned the financial world with a direct threat. Any global bank facilitating Chinese trade will be banned from U.S. dollar clearing and denied access to American markets. This is not a vague warning. It's a clear red line. The former president, now frontrunner for 2025, announced the move as part of a broader strategy to cripple China's financial power. The policy targets banks processing transactions for Chinese state-owned firms, exporters, or entities bypassing U.S. sanctions. According to insiders, this order would be enforced through the U.S. Treasury and SWIFT-linked institutions, effectively freezing out any violators from the world's dominant payment networks. For global banks, this means they must choose sides, and fast. Either continue business with China and face devastating U.S. retaliation, or comply with Washington and lose access to trillions in Chinese assets and customers. The Trump team is framing this as a national security emergency, arguing that Chinese trade fuels adversarial technologies, military buildup, and economic dominance. But critics warn this could fracture global finance, provoke retaliation, and trigger a global banking crisis. Trump has drawn the battle lines. Now, the world's biggest banks must decide, China or the dollar. The fallout began immediately. Within 24 hours of Trump's ultimatum, whispers of panic spread through boardrooms in London, Frankfurt, and Hong Kong. HSBC, with over $170 billion, 0 cents in exposure to Chinese markets, saw its stock dip 6% on fears of being caught in the crossfire. Deutsche Bank, already under pressure from regulators, reportedly held emergency meetings to assess its dollar-clearing vulnerability. These banks aren't just exposed to China, they're deeply embedded. Many handle cross-border settlements, trade financing, and corporate lending for Chinese firms. Cutting those ties means writing off billions. At the same time, losing access to U.S. dollar clearing is a death sentence. The ability to transact in dollars underpins everything from international payrolls to bond purchases. Without it, these banks are reduced to regional players overnight. Some institutions may try to de-risk, quietly scaling back China operations. Others may lobby Washington for exemptions, though Trump's tone suggests zero tolerance. Meanwhile, Asia-Pacific banks like Standard Chartered and Singapore's DBS now find themselves forced into geopolitical alignment they didn't ask for. Trump's ultimatum has turned every global bank into a pawn in a financial war. And the boardroom clock is ticking. China isn't standing still. As Trump tightens the noose, Beijing is accelerating its financial counterattack. At the center of China's plan is CIPS, the Cross-Border Interbank Payment System, a direct alternative to SWIFT. Backed by the People's Bank of China, it allows global banks to clear transactions in yuan, bypassing the US dollar entirely. China is also expanding bilateral currency agreements with countries like Russia, Iran, Brazil, and even Saudi Arabia, promoting the yuan as a trade currency for oil, tech, and commodities. But it doesn't stop there. A BRICS bloc is actively developing a common settlement system, potentially a digital currency platform that would eliminate dependence on the dollar for member states. And with over 40 nations expressing interest in joining BRICS, China's reach is growing fast. For Chinese banks like ICBC and Bank of China, this is an opportunity to solidify dominance in the global south. Meanwhile, state-owned giants are already shifting supply chain contracts to yuan-based terms. Beijing is betting that the world is ready for a post-dollar system. Trump's ultimatum may speed up that transition. What was once a long-term strategy for China has just become a rallying cry. Trump's ultimatum doesn't just target banks, it strikes at the heart of global trade. If enforced, dollar clearing bans could paralyze oil shipments, derail supply chains, and cause financial chaos in emerging markets dependent on both China and the US. Countries like India, South Africa, Turkey, and Indonesia now face impossible choices: alienate Washington or Beijing. Both vital partners. Meanwhile, US allies in Europe are trapped. Cut off Chinese commerce and risk recession. Ignore the US and risk banking blackouts. Markets are already reacting. Gold is spiking, the yuan is stabilizing, and central banks are ramping up non-dollar reserves at the fastest pace since 2008. Beloved, I have reached it. Hardly beloved, I'm sure, as what was once an invisible financial order is now cracking in public view. And if global institutions fracture along political lines, the world may enter a new era of economic blocs, with trust, trade, and technology split by allegiance. Trump's ultimatum is more than a headline. It's a line in the sand. By weaponizing the dollar, the U.S. has fired the first shot in what could become a global financial war. And now the world's biggest banks, governments, and corporations are being forced to choose sides. If global finance fractures, the consequences won't just hit Wall Street or Beijing. They'll ripple through every market, from food to fuel to tech. Supply chains will realign, investment flows will reverse, and the age of one dominant currency could quietly end. What happens next depends on how far Washington goes and how boldly Beijing responds. One thing is certain: the era of quiet global finance is over. Will the dollar survive as the world's anchor, or has America just accelerated its own decline? Let us know what you think in the comments. And don't forget to subscribe for more.